Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, October 19th through Friday, October 23rd, 2009. Well, folks, here we go again. Another wild week in Wall Street is behind us. This one with tons of earnings all across the board. We talked about Google, IBM earlier in the week, also Goldman Sachs, JP Morgan, Bank of America, Citigroup, all across the board. And next week is going to get even crazier. Next week is going to be known as technology big time next week, starting with Apple on Monday after the bell. So be ready for some volatility next week. I do believe it's going to be a wild one, and we're going to look at the technicals today to try and figure out which direction this market is headed. Now, what you're looking at before you here is the spiders, which again mirrors the S&P 500 on the 10-minute time frame. So we're looking at 10-minute candles. Each of those candles are 10 minutes long. Now, you can see this is Friday's action. Now, Friday was our first down day. The crazy thing about Friday, folks, and this just goes to show you what it's all about with these technical analysis tools that we utilize here at InTheMoneyStocks.com. But again, the beauty of it was that the master level got tagged on Thursday right into the close, and that's where I told my chat room and my Premium Research Center subscribers to go short the market, and sure enough, they did. And look at the drop you had from the close on Thursday to the opening low here on the first hour of the day on Friday. A beautiful drop, basically $1.50 on the SPY, and that's what it's all about. If you can read the technicals, you can take care of business and profit. Now, again, that was the key. So remember this level, guys, 109.68. 109.68 is the spot there on the upside of resistance. That's going to be your big level to watch next week. If you get through that week, you're going to look for 110 even number, and then there's another master level above it, not too far, that you need to know for next week if we do clear that 109.68. Now, I'm not going to reveal that number in this video. If you want to get that short on board, you're going to have to join the Research Center or the chat room at InTheMoneyStocks.com. I have been telling the Research Center premium members as well as the chat room that level for now over a week and a half to 2 weeks if we were to go above that, what to look for. So be ready for that. But again, you can see the proofs in the pudding here. That drop is a beautiful drop right here. That's all profit, folks. And again, it may not be over. Now, looking at the resistance and support levels, you see all these lines on my chart? Well, I'm going to go over them each individually. Then we're going to look at the 60-minute. Then we're going to go over what this market is all about on earnings and economic news next week and what to look forward to. Now, it's been a huge run, folks. Anyone that you ask out there has basically turned to that bullish side of the market. You can't blame them after basically 50 to 70% returns all the way from the NASDAQ to the Dow to the S&P 500. You know, it's just been one run for the ages. But what does it mean? When you break it down, where is this market headed? Let's look at these lines. First of all, the gap down took us down beautifully on Friday right to this level. Now, this level again, see this blue line? This was on the charts. This is where we talked about support to our chat room as well as the Research Center guys had this line. This line is at around 108.40 to 108.35. That is support. You can see it held all day long. In addition, this nice little channel here, see this underside belly? There's a little bit of support, orange trend line sloping up. That comes all the way back. Look at this. All the way back from the lows going back. Look at how far this goes back. From the lows all the way going back as far as the 6th of October. So if you take that low and just stretch that, it connects to these lows on the 7th and all the way through then, all the way to the lows on the 13th right here, all the way through to the 16th lows here on Friday. And that's the amazing thing about it. That's your trend line to watch for a breakdown. If you get through that orange line on Monday, you will go to this 200 moving average. See the 200 in red right below? That's your 200 moving. That is your target if you get through this orange trend line. It also coincides with the blue trend line, which would be a double bottom. Interesting, right? So see that. Now, if you break that level, if you break the 200, where would be your next stop? Your next stop most likely will be at this 107.65 level. 107.65 is a very important level to go over and understand. It is somewhat of a mini master level. Not a master level, but a mini master level, and it needs to be respected. Now, volume all of last week, even with the craziness of earnings of Goldman Sachs, JP Morgan, Google, IBM, Citigroup, Bank of America, volume was not heavy last week, and it's interesting to note that for the most part, the week traded higher. I mean, we did hit new highs on Thursday into the close. Granted, we pulled back a little on Friday, but you can still see the pullback. Again, the lows were made very early in the day, and I want to kind of show you guys, like, take a look at the lows early in the day. 10:30ish, 10 o'clock, the lows were made, and the market moved up on Friday. If you go back even further, Thursday, when were the lows made? Same time, right here, and we go up the rest of the day. Go back even further, same thing here. It was a gap up, but still the low was made early in the day on Wednesday. Let's go back even further. How about we go back to Tuesday? Look at this, guys. The lows made again at the same time frame. So what this is telling you is that the heavy volume selling is occurring in the morning, and then the volume lightens up the rest of the day. That has to be respected, folks. And again, you can go back and I'd say about 9 out of every 10 days over the last probably 6 months or so, as crazy as that is, the lows are made early, and then the market is able to float up the rest of the day. And that's why this run's been so impressive. Now, oil had a big run last week. What level is that coming to? That's coming into a little bit of an interesting resistance point coming up in the not too distant future here. You want to be aware of that. Exxon did hit a major level as well on Thursday and Friday. You need to respect that and look for possibly a pullback on Exxon as well at some point next week. Now, going to this chart, guys, let's look at resistance on the upside. See this yellow trend line see this pullback on Thursday, 1-2 bar pullback and then pop into the close. That line is giving you good resistance. Look at the high on Friday there, right to that line. That's your resistance line. That's going to be a resistance on Monday to Tuesday to Wednesday, depending on when we get there. Again, that's at 109.25. If you get through 109.25, look for the master level to be retested at 109.68. Again, if you get through 109.68, 110 even number to 110.5, 110.5, and then ultimately the next master one is not too far above actually, and that's going to be the line in the sand to watch. So again, great shorting opportunity late last week. And again, everything I talk about on these charts can be applied to your 60-minute, your daily, your weekly, your monthly. It's all methodology, folks, and it doesn't take a genius to learn at all. Very, very simple stuff. It just takes a little time, takes a little practice, and you can pick it up in a matter of days, if not weeks, if not literally, that's about it. So again, that's what you're watching on your intraday chart. Let's go to the 60-minute chart. Here's your 60-minute chart, guys. This is, look at this, nice pullback here from the gap down on Friday, and little inside bars inside that big move down. I think that has to be respected. Look at this. Down move up inside bars. Now, you have a mini bull flag here. Now, and can anyone see the mini bull flag and then the bigger bear flag? Well, the mini bull flag is right here. Big up candle, see the green candle? And then 1-2 sideways bars with a little bit of a tail. So that's a miniature bullish pattern. However, there's a bigger overriding bear pattern, and we want to see which way that plays out. This is the bear pattern. So you can see the bear pattern is much bigger. The bull pattern is right here. That's that small bull pattern. So interestingly enough, you have a pattern inside another pattern here, and you want to see how that plays out on Monday. Do we get a little push up at the open on Monday and then some selling? Do we just go right into the big bearish pattern and start selling on Monday? How's this all going to work out? Do we need to go to a double top at 109.68 first, or maybe even higher to the next master level? These are all possibilities that you need to kind of dissect and truly understand which way this market's going to head. All right, now again, if you move up, you're going to move into resistance at 109.68 on the 60-minute chart. Down support will be right here, guys. Anywhere between 108.15 and 108.25 to 108.30-ish, 35. This level, very, very good support. If you get through that, you could be in a nice little free fall pattern all the way down to about 107.25 to 107.05. Right down here, there's gap fill as well. Watch this gap fill. Watch this trend line as well. That will be a good level to look at. Now, again, folks, I just want to briefly go over what to look for next week in the realm of earnings. Number one, Apple after the close on Monday is going to be huge. If you go through that, BlackRock, guys, BlackRock on Tuesday, that's becoming a powerhouse. You want to watch that one. Texas Instruments is also on Monday. You want to respect that. So again, Apple and Texas Instruments Monday, BlackRock Tuesday, along with SanDisk, that's always good. Coca-Cola, UAL, Yahoo on Tuesday as well. Then on Wednesday, eBay, Amgen. You can just see there's tons of earnings here. Wednesday also has Wells Fargo, 3M is on Thursday, Amazon.com is on Thursday, AT&T, Broadcom, Capital One, you name it, guys. It's going to be a wild week. Be ready. Economic news next week is going to be somewhat muted. You do have building permits on Tuesday, along with core PPI, housing starts and PPI, Wednesday crude inventories, beige book on Wednesday, and then Thursday initial claims. The jobs data still remains the top thing to watch. You want to pay attention to jobs data as it's going to be number one. But again, next week is going to be a wild week. Tune into the Research Center, folks, $49.99 a month. Best value out there. The amount of money that could have been made there could have paid for a lifetime of it just based off our key calls on the hot charts and alerts, pro trader watch list, nightly videos of 40 minutes in length, daily market reports, key levels on gold, oil, the dollar, bonds, you name it. It's all in there. It's the best value out there. You won't find better. Have a wonderful, wonderful weekend, and we'll talk to you soon. Take care.